However, let me balance this with some moon math.
Okay.
Gold is adding an entire Bitcoin to its market cap every second Tuesday at this point in time. Even the big boys can move. It's like an elephant through a keyhole type scenario. If the zeitgeist clicks, you get the Paul Tudor Jones of the world, and Ray Dalio starting to click to it. We don't care that Ray Dalio is finally clicking to Bitcoin, but think about all those investment managers who now have access to the ETFs who are like, oh, I trust Ray, he's been around for a long time. I trust Paul, he's been around for a long time. Maybe I should actually get my clients in a 1%, 2%, 3%, 4% allocation. Suddenly, elephants through a keyhole. Don't forget that we could see some stupid stuff because...
All right, welcome to the Bitcoin broadcast. Today we have on James Checkmate or Checkmatey on X. I appreciate you coming on, man. You are definitely one of the best, if not the best, on-chain analysts I've seen. Followed you for a while now, and I appreciate all your work. How are you doing today?
Thanks, Vince. Good to have me on. And yeah, mate, really good. Summer's kicking in down here in Australia, so it's nice and warm, beach weather, happy days.
Nice. That's amazing. Do you want to give any background story about how you came up through engineering and into on-chain analysis?
Sure. It's a bit of a strange story. So I specialize in a field of civil engineering called geotechnical, and geotechnical is everything to do with the ground. So basements, tunnels, mines. I did lots of work in the mining space, train stations, all those kind of things. And the really interesting thing about geotechnical engineering is it's full of risk, super expensive, and a lot of, yeah, that's about right, because you just don't know what's underground until you dig it up. And once you've dug it up, it's not there anymore. And digging very large holes is actually a very expensive, very challenging, and non-intuitive task. So you got to dig the hole, then you find out what was in there, but you've got to keep the hole up before it happens. So there's just a lot of stuff that can go wrong. And generally speaking, if you need to drill boreholes to find out what's in the ground, there's buildings and there's cities and there's roads, and where are you going to drill the hole? So there's just so little information, and you've got to use a lot of gut feel and deal with a lot of risk. So if you design for rock and you end up with clay, then you're kind of stuffed. So you've got to think about all these things in advance. And in the world of markets, so Bitcoin was the very first thing I ever bought in markets. I bought the 2017 top, the absolute Pico top. I got rinsed, as we all do. I traded my 10 grand out of 10 cents in shit coins and, all that kind of stuff. And then by the end of 2018, I'd start, on-chain data was only just starting to evolve. Coinmetrics released the realized cap. And then we had that final it was a 50% sell-off in Bitcoin. It was like a 99% sell-off in everything that I was holding. And I was like, okay, I've clearly done something wrong. So I finally read the Bitcoin white paper at the bottom of the 2018 bear. And then it just clicked. I was like, okay, clearly I've done something wrong. Bitcoin is something special, but I appreciated markets, the way that markets traded, price, just people making decisions, learning about how options move, all these kind of things. So the market thing really fascinated me. It kind of got my engineering brain working. And then on-chain data was a way for me to visualize and model fundamentals of Bitcoin itself. I really started studying that quite deeply in 2019. And I was writing about it, making educational videos, all that kind of stuff. And then come 2021, it was February 21, one of my subscribers said, hey, Glassnode's hiring a data scientist. I was like, I'll put my hat in the ring. And the first thing I said to them is by the way, in the interview, I said, look, I'm going to be honest, I'm not a data scientist. I've taught myself Python, but I'm no data scientist. But I do know what all these metrics do. I kind of understand a general read on these things. They go, well, that's good because we've got a team of data scientists and none of us really know what the metrics do in a market context. So that's where where I started with them. I was there for 3.5 years, built out the analyst team. And then in 24, I think it would have been March 24, we spun up Check on Chain. So Check on Chain is basically maybe I wanted a challenge of building my own business, but also taking all the skills that I've learned. And really the thing that drives me, my real passion, is helping people understand why things happen. I've always felt that I've got a bit of a knack for explaining all the complexity, and in engineering meetings, you'll be sitting in front of a risk management team. And I could go down all the deep, dark rabbit holes being oh, that's the parameter for this model. And we've done this, and we've calibrated this. They just need to know your building's not going to fall down. And here's why. So you just got to simplify for the audience. So I tried to take that skill set, plus the Bitcoin side, which became, as we all know, it started like 2% of my focus, became 20%, and then suddenly it's 100%. I was like, I can't keep doing this engineering thing. So I kind of got to merge my hobby, which is Bitcoin, my skill, which is explaining complex things, and then the life challenge of starting my own business. And that's really what Check on Chain's all about.
Dude, we appreciate it because every time I have a question of like what the hell is going on in the market, I always know you'll have some sort of chart within like a week or two of like after craziness happening. I'm like, he'll have something to like kind of explain what's going on. So I just like wait for that. I'll sit there and speculate, but no, your charts are phenomenal. But
And it's
I mean,
funny how often the narrative of people like coming up with conspiracy theories is like, hey guys, have you like price suppression? It's like, have you noticed all this selling that's going on from just like hodlers? And they're like, no, it can't be true. It's like, but what if it is? Like, what if the simplest explanation is the most obvious one? We're not going up because there's guys selling. It's just that simple.
I know. I think one of my first interactions with you was about paper Bitcoin or something because I was like
Yes.
making a comment about paper Bitcoin summer, and you were like, no, just look. There's actually a fuck ton of sellers right now.
Yep.
And I
And
was
by
like,
the way, there's also a fuck ton of paper Bitcoin. That's also true. So there is a lot of paper Bitcoin, but you don't need a thesis that is centrally paper Bitcoin. And people, there's kind of two ways to interpret paper Bitcoin. One is the derivative side, people trading futures and options and cash settled instruments. That is always going to exist. And yeah, you could argue that's paper Bitcoin. And there's no question it affects the spot market. The other one a lot of people look at is like the Sam Bankman-Fried type, where like there's no coins and they're selling you paper. That is real, but like also, yes, that exists. And it did certainly exist with FTX. It obviously existed with Mt. Gox. But you'll notice that they're kind of few and far in between. So I put out a tweet a long time ago saying, there is paper Bitcoin, but it's probably on an exchange you've never heard of and you wouldn't even, it's going to blow up. You're like, Bit Happiness has exploded. You're like, I never heard of this thing. Some random exchange in China or something. So, it is out there and derivatives have a role, but also there's a lot of selling. So like that, let's like focus on that one first, and then we can supplement with all the other stuff.
well, speaking of paper Bitcoin, what about all these treasury companies? I've heard you say kind of they're exchanging, from the right pocket to left pocket type trading going on. Can you explain how that works and what the heck is going on with these treasury companies?
Yeah. So yes, I kind of. So the story with these treasury companies is that there's a very broad spectrum of, let's just call it quality and what's really going on. And the truth is, for me, you've really got to go down the rabbit hole on each of these companies to understand what's going on. Frankly, I don't think that it's important enough of a trend for me to actually go in and look at every individual stock, but I do know there's a handful of like things that are going on. You've got the likes of Strategy and MetaPlanet you could put in there. Like there's a handful of these that are just active accumulators and they're going very hard, very serious. They're buying a lot. Sure, the market hasn't quite, it has rewarded them, but it's then punished them afterwards. But generally speaking, there's a handful that are very serious about this, like all-in sailor strategy. That's fine. Lots of buy side, very impressive. But the number of firms doing that is small. And I think Preston Pish refers to them as like doing it responsibly. That's right. Going all in and just going ham. And I think we should also separate, like there's companies that just save in Bitcoin. That's fine. Don't call them treasury companies. They're just smart businesses. We're really talking about this like all in sailor strategy. Now, there's a handful of other ones. Ones that I can just probably call out is like 21 Capital. There's, I think, Adam Back's Bitcoin Standard Treasury Company. There's a few of these that have like 50,000, 40,000 Bitcoin. Now, that 40,000 Bitcoin is from Tether's left pocket into 21's right pocket. So they're kind of the same entity. The coins haven't been purchased off the open market. They've just been moved from one hodler to another. For the Bitcoin Standard Company, I'm pretty sure that it's basically Blockstream has a stack of Bitcoin that they bought back in like 2013 or 14. They've moved that from their left pocket to their right pocket. So it's kind of changed legal entity, but that's kind of it. So it's not really buy-side pressure. Now, there's a bunch of other things going on, which is, and the further down the risk curve you go, the more questionable some of this shit gets. So there's some of them, like people will have heard of this idea of a PIPE investment. This is private investment in public equity. Some of these companies, it's basically like it's an internal ICO, basically. A bunch of investors come in, they give the company a bunch of money, they buy some ridiculous, like 90% of the shares, And then suddenly retail is buying the stock, but there's only 10% float, and all the insiders are just selling into the market. So you get these price charts that are down 95% because there's like these really nasty crypto grade level scam deals going on behind the background. There's other ones where they're doing like these Bitcoin backed convertible notes. Some people are big fans of them. It's basically like you're a whale. And as a whale, you say, I'm going to give you 10,000 Bitcoin or 5,000 Bitcoin. So the company now has that 5,000 Bitcoin. The whale doesn't. No one knows about the whale, but everyone knows that the company has 5,000. But that convertible note has a bunch of terms. And I've heard of some of these things. Basically, if the stock doesn't go up enough where like suddenly the premium, the MNAV is like 2 or 3x what the whale gave, the whale can just take their 5,000 Bitcoin back and say, thank you very much, I'm pulling out. If the stock goes up 2x, then the whale says, okay, the Bitcoin are yours, I get the shares. And what are they going to do with the shares? They're going to go and sell them immediately and buy back double the amount of Bitcoin. So you could argue that's like a future purchase, but the company has 5,000 Bitcoin, but it also has a 5,000 Bitcoin liability to the guy who gave it to him. So yes, on bitcointreasuries.net, you're at rank number 45. Well done. But like there's a big loan out to some other guy who gave you the coins in the first place. So there's a lot of that stuff. And you just like, when you really take a look at this thing, the Treasury company, like the narrative has been that Saylor is the only buyer. And like the Treasury companies are the only thing that's keeping the market going. Couldn't be further from the truth. The reality is there's actually very little buying going on. Saylor is really the only serious buyer. And even his buying is insignificant compared to the rest of the market. So it's just one of those things where like the narratives are all over here, but the reality is like very, very different, completely different animal.
Okay. Yeah, that makes sense. That makes sense. I mean, to continue with the treasury companies, you did post that treasury companies are setting all-time lows. That caused some controversy.
I like poking Twitter. It's a fun experience. You just see what comes back. I use it as part of my process.
Yeah. Do you actually think that treasury companies are going to be like the biggest downfall in Bitcoin? Even if it drops 30-40%, treasury companies are going to drop like 90%.
Oh, they're going to get minced. Yeah. So my general view on treasury companies, you can probably tell I've bifurcated my view. I think Strategy and maybe Metaplan are in their own kind of camp. Strategy is definitely in its own camp. 640,000 Bitcoin, like that's just a different animal. And I literally put out a tweet just before I jumped on here. I'll check the comments afterwards. Basically saying you've got a company with 5,000 coins. Bitcoin goes to $1 million. Okay, you got a $5 billion company. Well done. Like, what are you going to do with a $5 billion company? Like, no one cares. It's an insignificant number. You're not changing the bond market with $5 billion. So the truth is that this long tail, I can't understand why anybody thinks that we need a treasury company in every country. And this one's got 60 Bitcoin. This one's got 500 Bitcoin. This one's got 5,000. It's like, the problem is strategy. You have a company with 640,000 Bitcoin. They can actually credibly issue the instruments. So one of my frameworks, I've got two frameworks about thinking about treasury companies. The first one is that MNAV gravity is always towards 1. And the reason for that, these companies will sell their stock if the premium is too high. So the company wants it to go towards 1. If it goes below 1, in theory, there's an acquisition value. There's also like a discounted NAV, so it kind of makes sense for that pressure to go back up. Gravity is towards 1, and a company has to reach a certain escape velocity to fight that gravity. Now, Strategy, for example, I think is in that ball camp where the second framework is the Bitcoin is not the product. And I see too many of these treasury company CEOs think that having Bitcoin on the balance sheet is the product. It's not. The product is how do you acquire the Bitcoin? So for Strategy, their product is bonds. Now, those bonds are packaged up as a preferred stock, but the product is bonds. They sell bonds to a market that wants to buy bonds. These bonds have 10% yields. The market wants these things. So really, he's turning a product into Bitcoin, and he's using the Bitcoin to sell more of the product. That's the flywheel. If you're a company that is only selling your equity, and your equity is the only product that you have, well, you kind of get to a point where if your MNAV goes towards 1, you now can't sell any more equity because you have no premium to monetize. So why would anybody buy your stock? And if you can't sell your stock, you can't buy your Bitcoin. If you can't buy your Bitcoin, what are you doing? You have no operating business. You've probably got a bunch of debt, and suddenly there's no way for you to re-expand that premium. So I think very, very quickly, these companies basically become long tail where there's just not much I don't know how they reinflate the bubble. And I think a lot of these companies are going to hit that wall, probably already have hit that wall. We're at an all-time high. I mean, barely off the all-time high for Bitcoin. We're at an all-time high for corn, and some of these treasury companies are down 60 to 95%. If the bull is this punishing, man, the bear is going to absolutely decimate some of these firms. So it's just a really brutal. It's tough to see what comes next. I mean, my view is, if these treasury companies, let's say Bitcoin actually runs from here, if we get up to like 150, 160, something like that, if these treasury companies don't absolutely moon, that is this market telling you that this trade is done and it's over, and it's really going to be a put up or shut up type moment for these things.
Yeah, I agree. I always say, I mean, like, there's no reason to buy some of these treasury companies unless you think you can outperform Bitcoin. Because if you're going to hold them and you're not going to outperform Bitcoin, why would you hold them unless it's like in a retirement account of some sort that is locked up that you can't
Totally.
use? I mean, there's no point, at least for me. That's how I see it. And so I own
And this
very,
is,
very little. That's how I just think about it. But I mean, the volatility right now, so not treasury companies, but Bitcoin, the volatility has been, as you like to call it, chop solidation, which I love. Dude, where we've been going sideways pretty much for a year. I know we're up like 100% in a year, but
sideways.
I know a lot of people do think we should be a lot higher, but can you kind of explain why are we not seeing this type of parabolic run at all? We're just, I mean, we went up, we went past the 100K mark, and then we just went sideways. I mean, granted, yes, we're having 10, 20% swings. That's fine, but we still ended up pretty much where we were at the beginning of the year. Can you explain how some of this is happening?
Yeah, so chop solidation, or the core thesis of chop solidation, it is basically that you close your eyes for 6 to 12 months and you come back, the price is the same, but there's like the bodies of long and short traders all the way on the road to get there, just liquidated accounts and people blowing stuff up. This is unique. We have actually not seen this kind of chop solidation thing. The only time in Bitcoin's history where it's even remotely close was 2019, and even then, it was more of a bear market. It just happened to not quite have the severity as 2018. So this kind of sideways grind, there's a few things to pull on. The first one is the pullbacks have been shallow by all bull market comparisons. So Bitcoin is now a $1 trillion asset in 24, $2 trillion asset in 25, currently at $2.5 trillion. So we've kind of been in that 1 to 2 trillion range. It's much bigger, much, much bigger than it's been in the past. You would expect that and there's been a lot of selling. We've already mentioned the selling. That is a huge reason why we haven't gone up to in my view. But if you look at spot order books, basically this whole cycle, if you look at the net taker, people who are hitting the bid or hitting the ask, literally market selling or market buying, there has been a net market sell bias, and it's not small. It's like hundreds of millions of dollars a day, really since April, and arguably for the whole cycle. So how can we have the market having this just like persistent, heavy, unending sell side, and yet we haven't gone down that much? Sure, we've had corrections, we've had sideways periods, but like we haven't had these like nasty waterfall corrections. We've had 2 sell-offs down to 32%, and then it's bounced right back again. So very brief moments, but like really, this is the shallowest bull market correction profile that we've ever had, but it takes a long time. Now, my read on this is it's basically the buy side is much more sophisticated. They are not like hodlers who just go and smash buy, hit green button, got to buy this thing because Bitcoin's going to moon. What is actually happening is you've got very large entities who are just absorbing sell side. They're allowing the market to sell to them. They're not buying off the market. They're allowing the market to sell to them. And that's a very, very different persona of investor and size and scale that we've seen in the past. So it's a combination of the upside has been a little bit capped because of just the persistent sell side. And I think for that sell side, one thing that again, there's a lot of reasons for this, but just a couple of ideas to think about. The average Bitcoiner looks like you and me. And the vast majority of people in our age bracket, they're having kids, starting families, buying houses. They're going through that phase in their life where Bitcoin is probably like 90% of their net worth. And they now actually have a reason to sell it because life is expensive and you want to actually live your life. So I think that's part of it. I also think there's a lot of like OGs, and when I say OGs, these are like 2013 and before, people who have serious like 1,000 coin stashes, multi-hundred coin stashes. If you sold those coins in 2018 or 2020, sure, you probably could have got out of a lot of them, but you probably still saw the promise of Bitcoin. And you also what if you moved your money to a bank account and suddenly the banks are like, hang on a second, where'd this money come from? And they freeze you out. There's like an actual risk in previous years of trying to move. Like some of these guys, we saw 80,000 Bitcoin. How do you move 10 bill? How do you move 10 bill without someone coming in and going, is this money laundering? We now have an administration in the US that has basically greenlit and said it's actually okay. So now the probability of you getting just wrecked based on banking system is much lower and regulations. There's also inheritance. There's a lot of people who are just going to be selling. Maybe they're rotating into the ETF. Maybe they want to diversify. I've certainly noticed this in my personal journey, kind of combining with that first point about like where we are in life. I'm like mostly Bitcoin in terms of net worth. But I also have a family. Yeah, I also have a family. And at this point in time, it's like, I don't really want that volatility all the time. And I also, gold is my second biggest holding, like 10%, because it's the same trade, just lower volatility. And I can imagine if Bitcoin goes on if Bitcoin is a 10x, I am going to want to sell some of it. This is just a fact. I'm going to want to sell some of it and just buy something that pays me an income, right? Because then, sure, it may not beat the Bitcoin, but that's fine, because it's consistent. It's just a different investment profile. And I can only imagine there's a lot of these guys who, I'm class of 2018, guys from class of 2013. If I'm thinking about this in the next cycle, they're there. That's where they're currently at. So I try to put myself in, where am I going to be on a 10x move from here? That's where they already are at 100K. What's my behavior going to be? They're probably doing the same thing.
Yeah, I agree. I mean, sure, if Bitcoin went to, a million, even 500K, I can already guarantee that a lot of my friends that are holding even just one coin, you're probably going to sell some. Because Bitcoin, like you said, Bitcoin doesn't give you an income. You're just holding it. And yes, I believe it's the best asset in the world, but at some point you want to get paid too. So
imagine if you could peel 5% of your stack off, buy a bunch of the S&P, and then suddenly the S&P, the dividends just give you like half your net, half your salary. Happy days. Like a lot of people, that's winning. That is like success. Well done. You actually don't, and the S&P goes up as well. So like you really just don't care.
Yeah, no, I completely agree. So this ETF has had like the most inflows in like record times. How is the ETF, do you think, affecting the Bitcoin price? And is this sustainable, do you think?
The ETF, so I in the report I did recently called the Bitcoin Checkpoint, it was really just an exploration of a lot of the ideas we've already covered, of just like how the market structure has changed. And the ETFs, in my opinion, from a financial standpoint, the most important thing that's happened to Bitcoin. From a financialization standpoint, those ETFs, I mean, they're just extraordinary. And I called that chapter the Extraordinary ETFs. When they came out the gate, they broke record after record. I can't think of an asset that's going to launch that's going to beat Bitcoin in terms of like the ETF demand here. Like, I think it's going to hold that crown for a long, long time. IBIT in particular, since November, has just exploded because of the options market. So really, I mean, the ETFs just keep sucking in. I mean, the average inflow week is like 1.2 billion, and the average outflow week is like 400 to 500 million. So it's like 2.8, I think was the last time I checked, 2.8 times the inflows versus outflows. When we get outflows from the ETFs, you're like a couple of days, a week, maybe 2 weeks, and then it's right back to massive inflows for just like months at a time. So these things are just absorbing an enormous amount of supply. Super, super constructive. I'm really waiting for a sign of a slowdown, and it just doesn't come. I've been looking at the way I mentally think about ETFs versus treasury companies. ETFs are starting to look a lot more like a passive bid. I know for me, like in my retirement account, it's literally easier for me to just buy the ETF. So I just literally every month, I don't even ask questions. I just buy the ETF. I don't care. I just literally market buy whatever the value that comes into my account is. So for me, it really is a passive bid, and I can only imagine there's a lot of people doing that. The treasury companies are more aggressive. They're trying to raise capital and they buy it aggressively, but they're both in the spot market. So yeah, I mean, I think the ETFs are just this persistent backdrop of consistent inflows, very little outflows. They're very, very much tethered into the derivatives markets, but still, just a huge and massive success across every metric.
Yeah. Yeah, no, they're incredible. They're fascinating to watch, and I think it's probably one of the most bullish things that we've had in a very, very long time. And it makes me think, I think that the one reason why this cycle could end or not end and just keep going is because of these ETFs. What do you think?
That's more or less what happened with gold, right? The ETFs went live in 2004, I think, and it just kept going for till 2012, like an 8-year bull market just kept going. And I also think, like, just from a narrative standpoint, you and I, we're aware of the Bitcoin price being thousands of dollars. Like, we've seen it in previous cycles. A lot of these TradFi guys, retirees, whatever, they open up their brokerage account and they just see IBIT going up. They don't see any pullbacks. They just see IBIT going up. That's their history of Bitcoin, is IBIT going from $25 up to 100 or 75, whatever it is. So their like unit bias is the IBIT chart, not the BTC chart. So they're not familiar with all that old history. They don't have all the old baggage. It's a different mental mindset. So yeah, look, I mean, I think we could just get a continuation. I mean, in my view, the main risk to Bitcoin is actually nothing to do with Bitcoin and Bitcoin demand. I think I can very clearly paint a picture for why people are going to want more Bitcoin and more gold moving forward, because we just know this debt problem is coming to a head. The main thing that I think is actually a risk to Bitcoin and the market generally is just equity markets. We suddenly see some kind of crack in the economy. We see the AI bubble pop, whatever it is. There's something external to Bitcoin that will drag it down as a risk asset. Correlations go to one type event. That's the actual risk in my view. I don't think a lot of it's going to come from Bitcoin itself. I think it's going to be an external factor that just impacts investor sentiment.
Yeah. Yeah. No, I agree. I completely agree. One thing also, do you think, because we're still in this cycle, I mean, typical cycle would end around November, December of this year. If that happens, I personally don't think it will, but we'll see. How do you think the rest of this cycle is going to go? Because, I mean, at least alone in the United States, they're cutting interest rates. They already did once. They said that there's about, it's like a 90% chance of at least one more, a pretty high chance of at least two more. How do you think the rest of this cycle plays out?
Yeah, so we're definitely in a cutting cycle. I don't know how much the cutting cycle really affects markets anymore. And that's this whole idea of the fiscal dominance picture that, you know, you can cut rates, but really the money isn't coming from bank lending. It's coming from fiscal spending. So it's actually more of a debt problem rather than a monetary problem, which I think Lynn Alden does a very good job of explaining. So that's my kind of base case on the rates thing. Now, you're right that we're something on the order of like days, weeks, months, a handful of months away from this being the longest bull cycle that we've had. And that's whether you measure it from the all-time high to the all-time high or from the cycle low to the all-time high, whichever one you want to measure, we're in the final throes of where every single previous cycle has finished. So there will be a lot of people who trade based on that. And they will sell their position and it kind of becomes a self-fulfilling prophecy. But what happens if it doesn't happen? And my base case here, I think the underlying Bitcoin market is actually quite strong. I've certainly got levels. Like if we go back down to 110, I don't really want to see that. We go down to 95, I think it's over because I just don't think Bitcoin has any place being down there at this point in time.
Do you say you think it's over?
If it goes to 95, right? So obviously the closer it gets to 95, the more question marks have to, at an accelerated rate, come into the picture because we've attempted 124, we sold off, and then we rebounded. Bitcoin really has no place going back down to 100K at this point. If we want this bull to continue, I think the damage to the chart will be too high at that point. So that's kind of like just like understanding those lines in the sand. So that's not my base case, but it is a level like it starts to deteriorate quickly the lower we go. So my base case is we actually go for a decent run. And I think like 150, let's face it, 150 is like a 20% move away from 125. So we're actually not that far away from a 150. Back in January, I wrote a piece looking at like how much capital I thought had to come into the market to justify staying at 150. If we had gone in January and we didn't have these big sideways chop, if we had gone straight from 100 to 150, I think we would have sold back down to 90 or 85 or something like that. The fact that we went sideways allowed coins to change hands, people to just like reacclimatize to 100K plus. We kind of went down to 85. We bounced all the way back up again. The market seems to want to be above 100. So the move from now, we actually have that capital that's come in. we've kind of justified, in my opinion, we've justified the move to 150. But unlike in January, we would have gone and come back. I think now, I think we should go up there and stay there. Like, I think Bitcoin has now proven that it's a $2 trillion asset. Let's go to 3. Let's find out how serious we are about staying at 3. And I think we deserve to be there. So my base case for the rest of the year is that we probably get to 150. That's where I think would make a lot of sense. We will see how the market contends with that. But what I think breaks people is the bear market, whatever that looks like, I don't think looks the same as previous bears. So previously we'd have like a 75% plus drawdown. 75K is going to take us down. I haven't done the math, but it's probably like 40K or 50K or something. Like, that's just too savage. The ETFs went live at 45K. I just don't think we belong down there anymore. And honestly, I don't think we belong below 75 because that's like we proved that level in 24. So what if we go to 150 and the bear market pulls us back to 90? And that's like the bottom and everyone's saying, oh shit, here we go. We're going to go down another 40, 50% from here. And we bottom out and then we start rallying again. Everyone looks like their cycle charts and they go, are you going to reset your cycle at that like 80K, 90K, 100K, 110K bottom? It's only like a 40% drawdown or a 30% drawdown. Are you going to reset your cycle charts from there? Do we get like a proper washout? People just get lost. Is it still part of the same cycle? Is it a super cycle? I don't know. And I think that's how this thing goes, is people just get lost and they kind of forget that the cycle was a thing because their common reference point is just gone and it disappears.
Yeah, no, I've been hearing a lot of people. I mean, I've listened to like Lawrence Lepard. I've listened to you. I've listened to Lynn Alden. And I've listened to a lot of people that have they've called for even higher numbers towards the end of 2026. They've been like in December 2026, they think we will be closer to even, like the 200K mark. And I'm like, dude, if people try and trade this market, if they think, sure, they might get like a little bit if you can time it perfect. If you can sell like the absolute top, like you said, like 150 to 190 is kind of like my bull case for this year. If you could sell in there and it drops back down to like 100K and then you have the balls to buy back in and not think that it's going lower, which you're automatically going to think it's going lower, right?
Totally at the time. Yeah.
Yeah. If we go from let's even just say easy numbers, 150 down to 90K, you're thinking we're going to 70, 75. So you're not buying yet. And then what if we bottom down, like you just said, 90K, and that bear market's over and we're going back up? And I think that's going to screw a lot of people. And that's why, obviously, I don't plan on trading it. But I think it's pretty fascinating that some of like the biggest names in Bitcoin are already talking about numbers that could be hitting in 2026. And I think a lot of people should listen to that because I don't think most of us are not smart enough to time the market to actually nail those types of things. But one thing I wanted to ask you about too is gold and Bitcoin parity.
Yes.
Gold, I mean, I think it's really important because let's be honest, gold has been $2,000 an ounce like since I've been alive, it feels like. I mean, my parents have owned it for a long time, but I mean, come on. I was born in 1990. Like, ever since I heard about gold, it's kind of always been like $1,000, $2,000 an ounce.
Yep.
It's gone nowhere. And now all of a sudden it's doubled. Like, it went from a $10 trillion asset. Now it's up to like 27 trillion, 27 trillion. That's phenomenal. And that's, I think, a big signal of where we're going at as a society, because people do not trust the government and they do not trust all this money printing. And I don't know. I mean, I do think that Bitcoin is going to do what most people say is going to follow gold and outpace gold. Can you kind of explain how that parity has been happening? If you have a chart, you can pull it up, or you can just talk about it.
Yeah, so gold, I agree, that's really, really important. And there's no question, if Bitcoin didn't exist, I'd be a gold bug. No question about it. So I definitely have a soft spot for gold. And back in 2020, I remember it would have been 2020. I think Saylor would have been like 2 or 3 months into his initial campaign. He's finally worked it out. And I was driving down the freeway and I was listening to him talking on one of these podcasts. And at that point, very similar to now, I have 10% of my position in gold and the rest was in Bitcoin. And I was driving down the freeway and I was listening to Saylor talk and I was just thinking, I need to sell my gold and just buy Bitcoin. Like, what am I doing here? Like, fastest horse, all that. And I did. That's exactly what I did. I got home, sold all the gold, immediately bought the Bitcoin. And that was a great trade because Bitcoin then just decimated, right? This would have been like 10K. Now, obviously, it came back down to 15K. But as you said, gold in 2020 had done the run, and then it went basically sideways until 2023. Did nothing around like 1,800 an ounce. Now, in the last 18 months, I started, because I made a promise to myself back in 2019 when I finally clicked what Bitcoin is. I knew I wanted to own both, but I didn't want to buy Bitcoin plus 500% and gold up. I don't care buying gold up 50%. I just didn't want to buy Bitcoin up 500%. So basically, I made a promise to myself. At some point, I don't know what the actual number was, but like at some point, you're going to know that it's the time to buy the gold. And I hit that point about 18 months ago where I was like, I've been stacking sats religiously for many years. And I was like, okay, now is the time to actually keep that promise to myself. And I started buying gold. Now, the more that I bought, the more I obviously learned about it and understand it. Gold is a special asset simply because you do not need to explain it to anyone. I was in South Korea earlier in the year, and there's just like parts of the street that are just full of gold, jewelry and bullion and all that. Just the whole street glistens because it's just gold. You're in Turkey and you like walk past a currency exchange and people just have like, they've got like 1 gram bars of gold, ways to get out. Same again in Turkey. We went to a museum. It was like I think it was like the Hall of Currencies or something like this. It's all this like Roman, Byzantine, Greek coins. And just before we went in, I got $200 in lira out. And it's just like, wad of paper. Like my back pocket is exploding with $200 worth of these bloody paper notes. And I'm in this museum just looking at these like tiny little Byzantine coins. And I'm like, that coin right there is worth thousands of times more than this wad of paper in my back pocket. And it was made, 2,000 years ago. Crazy stuff like that. And you just realize that gold has this shelling point. I got my old man into Bitcoin in 2020. He rode the up and he rode the down. And now he doesn't really care. He loves that number go up. He hated 2022 for obvious reasons, but now he's very, very happy with it. But I didn't have to go anywhere near the same convincing with gold. He just understood it. I was explaining a shelling point to him. He's like, when he was trying to work this all out, he's like, why would I buy more gold? Because he already had a large allocation. He goes, why should I buy more? And I said, look, the world's in a pretty weird place, obviously. And he goes, yes. And I said, we're in Paris. I tell you, I want to meet you at midday. Where are you going to be? He goes, Eiffel Tower. I said, yeah, me too. When the world is in a really weird place, people are just going to go to gold because they don't have to think about it, hands off. I'm going to wait and see what happens. That is its role. The central banks already own it. Do what they say, do what they do, not what they say. I looked at some of the gold regional holdings. All through that period you were talking about, like the 2000s, Europe was just unloading their gold. And then they went stagnant since 2008. China, all the East, China, Russia, that whole Eastern bloc of countries started buying after 2008 and haven't stopped. And then come 2022, when the US froze Russia's reserves, now Europe is back to buying gold. The whole world is now back to buying gold because you just put it in the vault, you don't have to think about it, and it's $27 trillion. It's big enough to absorb serious flows. So it is just a sign of a regime shift. Gold is like, in my view, the long-term inflation rate. It moves very similarly to like the long-term price of housing, the long-term price of stocks. You've probably seen charts floating around where like this year, gold has now overtaken the S&P over the last like decade. So over the long arc of time, gold prices in the real debasement rate. And speaking about like more locally, gold is absolutely ripping. And the framework that I like to use, I actually think gold and Bitcoin, they're more than just assets. They're actually information. They're very, very high density information prices. And the way I view them is they're siblings. Gold tells us where we're going. At the end of the day, gold tells us the final answer. Bitcoin tells us the road to get there, right? So you may have seen that chart by Mermican Capital where it shows like the gold price in Weimar, Germany, and it's parabolic in absolute terms, but the monthly swings are fucking crazy, right? All over the place. The long-term profile, that's gold. The journey to get there, the swings and roundabouts, the ups and the downs, that's what Bitcoin tells us. So when Bitcoin is showing weakness and gold is ripping, one interpretation framework is that they're going to print a boatload of money, but we got to go down and shit's got to break before they do. Their response, gold tells us what happens after the response, the trade after the trade. But the trade could be, we got to go down and then we're going to go up a lot. And that's the kind of environment where Bitcoin will probably take a hit if the equity market sinks. But it's going to rip like you wouldn't believe in the response, which gold is telling us where we're going.
Yeah, I mean, because if Bitcoin reaches even close to what gold's market cap is, I think Bitcoin would have to be like 1.3 million, something around there.
Yeah, it's a lot.
1.3
10.8 kilos of gold is rough parity.
Yeah, that's absolutely insane. I mean, do you think we could reach that? How do we reach that?
Yeah, no, totally. That's my that's why I own Bitcoin, because parity is where we belong. And like right now, the ETFs, the Bitcoin ETFs have about 170 billion or 165 billion in them. The gold ETFs globally is about 400 something plus, maybe a bit more because of this rally, but let's just say 400 billion. The Bitcoin ETFs are already 40% parity with gold ETFs. So like we're already at 40% parity. And the market cap is like 9.2% parity. I mean, look, having bought gold and having bought Bitcoin, there's been many times where I've been umming and ahhing which one to buy. And I could go and buy gold, but that means I've got to actually like physically leave my house. I've got to go to a bullion shop. I've got to then, buy it, come home, and then I got to look after it. And there's all these things. Whereas like Bitcoin, I can just like buy it and zip it straight into my cold card, and that's the end of it. And it's just secure, right? And like inaccessible by anybody else. It's just a much better system. And by the way, if I need to undo that transaction, I've got to physically get the gold bar. I've got to get on the, jump in the car. I got to drive down the coin shop. I got to go sell the thing. They're going to give me a shitty spread on both the buy and the sell. Bitcoin, I literally get market price and I can have the whole transaction done in the next 5 minutes, right? The time it takes me to send an email. It's just 10 times better. It's just 10 times better in every possible way. So why do I buy gold? It's actually not because I think it's better. It's simply because I need the same store value asset, but I don't want it to have the volatility profile that Bitcoin does, because I may need that capital, right? Because the way I view Bitcoin and gold is actually not as assets, they're as my savings. So what if I need my savings, for example, to buy a house? It may well be that the housing market is in an optimal place relative to my gold and my Bitcoin. But what if Bitcoin's in a ripping bull market or a horrible bear market and I just don't want to sell it at that point in time? The gold is there to be sold so I can take advantage of that and like not have to worry about selling my, it's kind of like pre-sold Bitcoin in the same trade, same bucket. So that's how I think about those two assets. I think they're both important. I think understanding gold is a huge benefit for Bitcoiners. I think Peter Schiff, be the opposite of Peter Schiff. You want to understand the opponent, right? You want to understand the other side. So Bitcoiners that own gold are just a force to be reckoned with, because they're going to understand this sound money trade better than anybody else.
Yeah, I agree. I mean, if you just buy Bitcoin every time Peter Schiff says buy gold, like you'd be rich by now. I was looking at the realized volatility and the 2016, the 2020 to 2021, and the 2023 to 2025 cycle. And is there any way that you can explain this chart a little bit to me?
Okay, so we're talking about realized vol?
Yeah.
Okay, let's pull this thing up. Okay, so if we're talking about realized volatility, is this the one that you're referring to?
Yes, sir.
Yeah, so I think this is really the, if there's one chart that shows that the cycle has changed and evolved, and that when I say this time is different, I don't mean in the the four most dangerous words in finance where like it's a bubble and you're going, oh no, it's a new paradigm. No, that's a different thing. This is saying like it is clearly different. So historically speaking, Bitcoin is traded like a commodity where you get upswings in volatility during bulls, and then it dies off when no one cares in bears. Clearly different. This is that chop solidation we were talking about earlier on. This like stable, boring ass range. And actually, let me jump to the last chart in this deck, because if we look at the options market and the derivatives market, hang on, where are we? This is the implied volatility profile. So in my view, the ETFs are the most important financial change in Bitcoin's history. The second most important and the least discussed is the launch of the IBIT options. They're absolutely massive and they've just exploded in size. Now, what we're seeing at the moment is whenever derivatives come into the picture, Wall Street thinks they can tame a wild horse, and they think they're going to be able to extract premium by like selling covered calls and building structured products and all this kind of stuff. Bitcoin has this unique capacity, as we all know, of kicking people off, right? When they think they've tamed the horse, it boots them out the back door and says, no, thank you. So the market is currently pricing in a much, much lower volatility profile. In a way, it's been lulled to sleep. It's basically looking at saying, well, it hasn't been volatile for months. So why should it be volatile in the future? I'm just going to assume it's going to continue. And they keep selling and selling and selling and selling vol. And when too much volatility gets sold, it's too cheap. So what happens? People buy vol. People create volatility. Bitcoin really starts to move. And suddenly all those guys who got very complacent selling all these COVID calls and all this kind of stuff, when this thing wants to go, it can just blast and rip through people's levels. So, and then you get real volatility because they've sold all this volatility and they're short vol, and then suddenly it just comes ripping back into the market. So I think it's one of these dynamics where like chop solidation is going to be a feature of the market moving forward, but there's also going to be times where it just kicks these guys off the horse and says, no, thank you.
Then you also have a good chart that is the Bitcoin daily price, and you were basically showing the ETF launch. And I know we were talking about ETFs, but I just kind of wanted to look at this, and then so people could kind of see what you were talking about. It was like one of your first charts that I saw in this deck. Yeah. So is this basically showing that, I mean, that the next run, because are we already out of that last run right there?
Yes, we are. We would have broken out of the yellow zone already.
Okay. Do you want to show the gold one by any chance?
Yes. And in fact, at the end of the day, like this is why we're all here. So I mentioned before that February 22 is when the US froze Russia's reserves. Yeah. And the reason why I actually really like this chart, and I'll explain what it is. Okay. The reason I like this chart is it's not cherry picking. We're not saying like, oh, look, Bitcoin performed since like the very, very bottom till the very top, because obviously we know it kicks ass there. But here, what I've done here, I've benchmarked everything against gold. So this is basically the performance of fiat currencies, all like the majors, everything from the Mexican peso to the yen to the US dollar. This is comparing fiat currencies versus gold since that very important geopolitical event, where the whole world is basically saying, okay, sovereign savings are now challenged, and we have to look for something else to save our capital and our wealth in. So versus that gold benchmark, most fiat currencies, and by the way, this is like already out of date because of gold's run from here, fiat currencies have lost 40 to 60% of their value, and this is going to be more as of today. Whereas Bitcoin is up 50 to 80%, depending on where you want to measure it from. So Bitcoin is one of few assets that's actually outpaced that gold benchmark, including this 55% drawdown during the bear. So it's not cherry picking and just saying like only in the good times. This has got the majority of the 2022 bear market as well. Now, it's not only fiat, because you could say, well, fiat's programmed to debase, so of course it's down bad. Toilet paper, which is long duration government bonds, is down 65%. And again, that's also going to be in a worse state than where this chart was made. The S&P is down, like silver might have broken even now, I think, after its run. S&P 500 down 25%. So, no matter which way we want to track this thing, Bitcoin is kicking ass relative to gold, which is kicking ass relative to everything else since that very important geopolitical milestone. And the last one that's kind of on this picture, like you hear people say all the time that Bitcoin is just like levered NASDAQ. Sure, okay. But the correlation between Bitcoin and gold in orange is very, very strong and has been since 22. So is the correlation with the NASDAQ, which is in red, and so is the correlation with the S&P 500, which is in blue. Notice how they were all oscillating in earlier years, right? Bitcoin was an uncorrelated asset. This isn't telling you that Bitcoin is correlated to the NASDAQ. This is telling you that everything is correlated to everything because the denominator is fucked. What's actually going on is the denominator, which is the dollar and fiat currency that we measure this stuff in, it's getting debased. So it's all one trade. We're seeing this correlation across everything since 22. Everything is just saying there's something wrong with the denominator. That's the real signal that's being told here.
I appreciate you doing this with me, and keep up the good work. I've enjoyed all your charts. I wait for you to post them. I wait for your opinion on a lot of things because a lot of times, I trust you kind of get sucked into like the Twitter verse, and then you don't know what to think anymore. And so sometimes, like you said, you got to like step back and be like, wait, what actually is happening? And I think when you're looking at these kinds of charts, it does help out, and it does just bring you back down to earth where you're like, stop paying attention to like the daily, candles. We went up to 126. Now we're back down to like 120. People are saying it's over, bull run's over already. And seeing charts like this, you're just like, no, look where we're going. And there's no point in ever worrying, no point in trying to trade this unless, we do happen to get that massive run up and you want to take off a little bit, 5-10%, like you said, for yourself.
No, I appreciate that. And really, the secret sauce, like the way that I like to think about this stuff, no one can predict the future. And so many people they think they can find an indicator, find an analyst, find some dude some guru who's going to tell them exactly where we top and exactly where we bottom. It's bullshit. The reality is, we've got an enormous amount of data, whether it's on-chain, whether it's futures, whether it's derivatives, options, ETFs, the whole lot. You're just looking at information and you're trying to build a picture of like, what are the likely scenarios? You can't predict the future, but the only thing you can control are your decisions. So I like to just make my decisions ahead of time. If we go to 150, what am I going to do? For me personally, I'm probably going to just stop buying, because at the end of the day, I don't really want to sell my Bitcoin, but I also don't want to buy the top. And 150 and above is getting heated to overheated. All right, 200 is kind of where overheated conditions are. I just don't want to buy a bunch up there. And if my goal is to try and buy the lows, I want to keep my Bitcoin and I want to have cash. So by literally not buying, it's the same as selling and having excess cash, but minus the tax bill. You don't have a tax bill if you just like save the money. So I just choose not to buy the top. And conversely, if we sell off, I've got levels where I'm like, I'm stepping in, because that to me is deep value. So instead of predicting the future, I'm just literally saying, what are my decisions going to be at point A, B, and C? Because that's all I can control. I can't control anything else.
Absolutely. No, I mean, if we even retest those 95 levels that you were talking about, I can already guarantee you there's going to be people like taking out loans, and
Yeah.
it's going to get wild.
And I think the great irony is the amount of people who are thinking about taking out loans at 126 when they should be thinking about taking out loans at 90. That's the amazing thing about markets, is that people always feel like this is the crowd behavior. People want to buy when it feels safe to buy. And when does it feel safe? When everyone else is buying and the price is ripping. Totally. And that's actually the worst time. The best time to lever up is when it's horribly deathly. And like, you would never lever up because you're like, what if I get liquidated? It's like, but that's the most unlevered time. It's literally the best time. So, people, you're just thinking in reverse in the market cycle. It's not easy. It's very hard, but that's actually what you need to do to master this stuff, is like, do the opposite of everyone else, because ironically enough, it just works tried and true in markets.
Yeah, no, I'm definitely more of like the emotional person, as in I like the psychology of markets. That's why I like having you on Twitter, because I can look at you and you're more of like a numbers type of guy. And I think of it more of like a psychology thing, because just like how we were saying, I mean, I have friends that are like, even the last bear market, we hit 69, we were going down. I had friends that are like, I'm going to buy 2 Bitcoin when it hits 8,000. Okay, well, you could have bought one. You could have bought one at 15, and you didn't. Guess what? You did not buy because you thought it was going down. And guess what? Even if we hit 8K, you probably wouldn't have bought 2, because you would have said it's going to 4. And so I love the psychology behind markets, because I think that plays more of a factor in than people think. And human behavior is not going to change. And so definitely, if we hit the 150 to 190K, there's going to be sellers. Are they going to be correct? Maybe. I don't know. I'm not willing to risk it. Like you said, I probably will dial back on the buying, because I've bought the top. I bought the top enough. You need
just to do it at least twice. Then you're like, I don't want to do that again.
Yeah, I bought 2017 top. I bought 2021 top. I'm like, okay, if we hit like 160K, like, maybe I'm gonna hold back a little bit, and I'll let my DCA go. That's like a small DCA. That's fine, but I'm not gonna unload the truck for that. And that's just how I see it. And
that's exactly right.
Yeah, the psychology behind it is fascinating to me, and it's gonna keep happening. And I'm very excited to see where this goes, because I do think it's happy days. I'm enjoying this, seeing the market go all the way up to 126K. And I do think you're right. I think we see the 3 trillion at 150K.
We deserve it. I think we've earned those stripes.
Yeah, I agree. And we've definitely have like a pull to it. I think people think that we should already be there. And just because people think that we're already should be at 150K, they're going to be disappointed if we don't even hit 200K, because that's like their kind of parabolic run per se is like 200K. But I'm like, guys, like that's a lot of money. That's a lot of money that has to come into this market with zero selling for us to reach. I mean, because now you're talking about closer to a $4 trillion market within a couple months. And yes, Bitcoin did those types of runs in the past, but we were a much smaller scale back then. It didn't need...
However, let me balance this with some moon math.
Okay.
Gold is adding an entire Bitcoin market cap to its market cap every like second Tuesday at this point in time. So like even the big boys can move, like, and that's the thing. It's like an elephant through a keyhole type scenario where if the zeitgeist clicks, you know, you get the Paul Tudor Jones of the world just saying like, it makes sense. You know, Ray Dalio starting to click to it. Like there's all these guys that, you know, for us, we don't care that Ray Dalio is like finally clicking to Bitcoin, but think about all those investment managers who now have access to the ETFs who are like, oh, I trust Ray. He's been around for a long time. I trust Paul. He's been around for a long time. Maybe I should actually get my clients in a 1%, 2%, 3%, 4% allocation. Suddenly, elephants through a keyhole. So you're dead right. Set your expectations lower and realistic, but also don't forget that we could see some stupid stuff because gold adds a whole Bitcoin every Tuesday.
That is so wild how it's doing that right now. It's fascinating to watch, and I'm excited for it. You know, like I said, happy days are coming. I think we do get some run up here, and but Checkmate, dude, I appreciate you so much for doing this.
Mate, thanks for having me on. It's been a real pleasure.
Yeah. All right. Thank you so much. Thank you guys for listening to the Bitcoin broadcast. Please like and subscribe if you haven't, and we will see you next time.